Jensen was a great spokesperson for Nvidia, of course, but Colette Kress is an amazing CFO, and she's at the UBS Global Technology Conference today, and she's talking about how it's something that Jensen made. First of all, 90% of CPU for PC server now it's 90% GPU. That's him. That's going to happen for the rest of the of all technology everywhere. But the other thing that she's doing is mentioning, look, the new orders are right on top of the old orders. They don't rip out the previous, but they don't take Blackwell and get rid of the previous iterations. Most important thing she's saying, and people have to start to understand, she's a big believer that a lot of what you hear about is wrong, that these companies are making billions of dollars, and the idea that the CapEx is too high is totally out of whack. And what she would tell you is, if CapEx was too high, why did Google just add 100 points and is one of, if not the biggest buyer? And the answer is that it's a canard. Everybody's making a huge amount of money off NVIDIA, but everyone's crying poor. And that's not happening.
Right. X OpenAI, in your view.
OpenAI is, Carl, that's cool.
Yes. Right.
I don't want to say it.
Jim, you got Amazon tonight. Busy show. Yeah.
Yeah, and I do. Amazon Web Services is really, really important. By the way, I mean, this is just still one more company that wants to take it to just take it to OpenAI. Look, when you go out there and you make yourself public enemy number one, which unfortunately I've done at times, I got to tell you, there is a target on your back.
There's
and you can't.
Newton's law.
Yes, and I just think that Altman should not speak at all and carry a bazooka. No, carry an H-bomb. Maybe one of those. I don't know, neutron bombs.
There's some deep-pocketed rivals out there.
Yeah, and sure. And forget me.
Morning long, but right now the Dow futures are up near their highs, about 137 points above fair value. S&P futures up by close to 22. The Nasdaq indicated up by about 75. And if you've been watching Treasuries, you will see that the 10-year is sitting at 406. The 2-year is at 349.
All right, ADP out with November private payroll data. We're going to get it from Steve Leisman, but we have the person right here. This is like one of those middlemen in healthcare. Hey, Steve.
Hey, Joe. Yeah, a big miss on the ADP payrolls. The private payroll company saying private payroll shed 32,000 workers in November. That's the fourth negative number in the past 6 months for this series. Take a look here. The estimate was for 40,000, so the street was off on this one. And how did you get there? Well, goods producing shed 19,000 workers, service producing shedding 13,000 workers. But the big story here, and I'll show you more detail on this, is what's happening with small business, down 120,000. Medium and large business doing okay, up 51 and 39,000 respectively. But take a look at this chart here. Virtually all of the job losses have come from small business, which has been negative in 6 of 7 months since April. Without those losses, ADP numbers would actually be positive. But you can't get rid of, or you can't exclude small business. And then you look at it by sector. Well, we've seen those two sectors do it. Education, health services, leisure, hospitality leading the way. But manufacturing down, information down, and professional business services down by 26,000. Also, another sign of weakness in the job market. Job stayers, their wages up 4.4. That's down a tenth from the prior month. And job changers, that was a big number, or had been. That's down 0.4 of a point to 6.3%. So, Joe, at least according to ADP, additional weakness in the job market. And small business getting hammered, and there is some information that some of this may be coming from being hammered by the tariffs.
Yeah, trying to figure out. I'm watching, all the markets. I saw Bitcoin above 93. No, they didn't. But this, I don't think people know whether, if we already had a cut in the cards, then we don't need any weak data. We
don't really want any.
But we might need it for the next. The next ones are less sure now, so maybe it would help with those, or maybe it's just downright bad and not great when we lose jobs. So I don't think people know what to do. Let's see what Neela thinks. Joining us now, Neela Richardson, ADP chief economist, and you're not here to tell us what the stock market should do based on these numbers. You can just tell us that things have worsened in the last month.
Yeah, this is a small firm story. This is even more than a small firm story, Joe. This is a mom and pop story. Because if you look at where the losses came in, it was for firms with headcount under 50. And you take that and you extrapolate it to the industries, those are the same industries. Construction, for example, where there are a lot of small firms. And so when you think about what small firms are dealing with, if you put your mind into the space of a small firm owner, they're not going to raise their hand and say, we're cutting by 10%. They're just not going to replace that retired worker. They are just going to let attrition take care of this issue for them. They are going to have a hiring freeze. They may not hire a teenager or two in the bakery over the holiday season. They're going to make these small changes that add up to a lot because 44% of U.S. workers work in these mom and pop establishments.
What's ailing them? What is ailing them? What's the problem? Tariffs?
You used to be able to look at your consumer demand and your traffic and make the story. But if you're a small firm owner today, you have to think about your supplier. You have to think about the Supreme Court decision that will kind of pave the way for tariffs. You're going to have to think about.
Hey everyone, hope you're all having an amazing day. We've got a packed update on Nvidia, Washington politics, export rules, and the latest AI momentum. So let's get straight into it. The first major headline is actually political. The GAIN AI Act has officially been pulled from the big defense bill. For Nvidia and the entire U.S. semiconductor sector, that's a massive win. I've said this many times. Even though the act had good intentions, it would have backfired by weakening U.S. chip makers and giving companies like Huawei an easy opening to grab global market share. Removing it prevents a huge strategic mistake. Now onto Nvidia's new model partnerships. They announced fresh collaborations with Mistral, helping accelerate the new Mistral 3 series of open models. Their largest model is based on a mixture of experts design, meaning instead of activating the entire network for every token, it selectively fires the parts that matter most. The result, much higher efficiency, lower compute cost, and far more practical enterprise AI use cases. And Nvidia followed that up with another big update, new benchmarks showing that Mo models run up to 10 times faster on Blackwell NVL72 systems compared to H200. Many of the world's best open-source models now use Mo architecture, and Nvidia's full-stack platform clearly unlocks their full potential. So if anyone still says Nvidia isn't strong at inference, these numbers completely shut that down. Their hardware plus software stack is still unmatched. Another notable moment today, Jensen Huang appeared on the Joe Rogan Experience for a 2.5-hour conversation. I'm still going through it, but the fact he's showing up on platforms this big says everything about Nvidia's central role in the global AI conversation. Before we go deeper into Nvidia, let's quickly talk about Iron, because we finally got full details on their latest financing round. As a reminder, Iron completed 2 separate raises, a direct equity sale, and a convertible notes offering, mainly to strengthen their balance sheet and scale their build-out pace. In the direct offering, Iron sold around 39.7 million shares at $41.12 each, raising roughly $1.63 billion. They immediately used that cash to retire older convertible notes carrying interest rates above 3%. Then in the convertible offering, Iron issued 2 tranches totaling $2 billion, with another $300 million available for overallocation. The new notes carry extremely low coupon rates, just 0.25% and 1%, which is far cheaper than their older debt. Iron also added capped call contracts that help reduce dilution until the stock rises past $82.24, which is double the offering price. In simple terms, if the stock rallies, Iron can settle note conversions in cash instead of flooding the market with new shares. Taken together, Iron is lowering its interest burden, removing heavy dilution notes, cleaning up its structure, and raising the capital needed to satisfy huge demand, especially from big customers like Microsoft. None of this changes my long-term view. I remain bullish over the next 1 to 2 years because compute and power demand is massively outpacing supply, and Iron is in a strong position to benefit. Back to Nvidia and the bigger story. One thing that continues to surprise me is how much Wall Street still underestimates Nvidia's long-term potential. Analysts mostly focus on the data center business, which is huge, but many of them are completely missing Nvidia's next trillion-dollar frontier. Physical AI. Physical AI covers robotics, automation, factory intelligence, real-time on-device inference, basically AI interacting directly with the real world. Nvidia controls the entire platform. They provide the GPUs for training. They provide Omniverse, the simulation engine where robots learn. and they provide AGX hardware for real-time inference on physical machines. Jensen has openly said physical AI is a multi-trillion-dollar opportunity, and he's not exaggerating. More than 2 million developers are already building on Nvidia's robotics stack. It's being overlooked today, but by 2026 to 2027, it will be a major storyline. On the product side, Nvidia's roadmap is one of the strongest in the industry. Blackwell Ultra scaling now. Rubin coming in 2026. Rubin CPX late 2026. Rubin Ultra in 2027. Feynman in 2028. Jensen expects $3 to $4 trillion of AI factory buildouts globally by 2030. That's not hype. That's structural demand across power, chips, data centers, networking, and robotics. When you look at everything together, the infrastructure cycle, the software ecosystem, the next frontier in physical AI, and Nvidia's dominance in accelerated computing, it's clear we're nowhere near a bubble. The bottleneck in AI right now is not speculation. It's supply and power shortages. From where I stand, Nvidia still has years of major upside. Long term, I believe this company becomes far more valuable than where it is today. Stay patient, stay focused on fundamentals, and don't let short-term volatility shake you out of a long-term structural growth story. Thanks for watching. If you enjoyed this breakdown, please hit like, share your thoughts in the comments, and don't forget to subscribe. It's free, and you can always change your mind later. See you in the next one.